Good morning students, this is CA Aditya. Welcome to CA Final Auditing classes. Please don't forget to subscribe my YouTube channel. Okay students, in the last class we have discussed, that is in the first class we have discussed about interaction relating to audit report and contents of audit report and SA 701, SA 700, SA 701, SA 705 and SA 706. Okay students, and in the contents of audit report we have discussed about point number 1 to point number 8, and today topic we are going to discuss from point number 9 to point number 16. Okay students, let's start the video. Okay students, point number 9 of contents of audit report discuss about SS 720 auditor's responsibility relating to other information. See students, financial statement information and other information relating to the financial statements are prepared by the management. Okay students, financial statement information and other information relating to the financial statements are prepared by the management, and there should be consistency. That is, there should not be any difference between the financial statement information and other information relating to the financial statements. Okay students, if there is a inconsistency, the auditor should investigate whether the inconsistency is due to uh, other information, then management has to rectify, because the auditor cannot give modified opinion, because there are no misstatements in the financial statements as per definition of modified opinion. See students, the auditor can give modified opinion only when there is a misstatements in the financial statements or possible effect of undetected misstatements could be material. Okay students, in such case only the auditor can give modified opinion. Since in this case the information relating to other than financial statements, so the auditor cannot give modified opinion. In such case the auditor will provide in other information of the audit report. So in such case auditor will provide in other information of the audit report. See students, auditor investigate whether the inconsistency is due to other information, then management has to rectify, as here auditor cannot give modified opinion because there are no material misstatements in the financial statements as per definition of modified opinion. Then in such case the auditor can provide in other information of the audit report. Okay students, if the inconsistency is due to financial statements, that is material misstatements due to financial statements, then the auditor will give qualified opinion or adverse opinion. Okay students, let's see point number 10, that is management responsibility. See, the management responsibility are of three types. See students, the first point is whether the financial statements are prepared in accordance with applicable financial reporting framework. Applicable financial reporting framework means compliance framework, fair presentation framework, which we have discussed in the last class. Okay students, whether the financial statements are prepared in accordance with the applicable financial reporting framework, that is the management responsibility to see that whether the financial statements are prepared in accordance with applicable financial reporting framework, and also to check whether the internal controls are necessary, that in the preparation of financial statements, that due to material misstatements which may be due to fraud or error. See, internal controls whether implemented, if they are implemented there will be no material misstatements if the internal controls are strong. That is why the management should take necessary steps in the case of preparation of financial statements that are free from material misstatements, whether due to fraud or error. To reduce the material misstatements due to fraud or error, the management should implement strong internal controls in the organization. Okay students, the management also should assess the going concern basis of whether the management has having material uncertainty, then management has implemented going concern basis of accounting, then it is not a correct appropriate method of accounting. In such cases the management should discuss them to the auditor about the material uncertainty, then the auditor will provide them in the material uncertainty on audit report paragraph in the audit report. Okay students, see, assessing entity's ability to continue as a going concern and appropriately accounted for should be checked by the management. It is the responsibility of the management. Okay students, let's see next topic. See point number 11 of contents of audit report. Auditor's responsibility for auditing of financial statements. See students, to obtain reasonable assurance that whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. See students, the auditor should check that whether the financial statements are whole or free from material misstatements to have reasonable assurance. See, reasonable assurance is a high level of assurance, but not absolute level of assurance, because of inherent limitations of internal controls, which we are going to discuss in the later topic of essay 200. Okay students, see the auditor can give only reasonable assurance but not absolute level of assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. Okay. See, auditor's responsibility in appendix to the audit report. See students, auditor's responsibility for appendix to the audit report. That is, in the audit reports, the auditor will appendix in the auditor responsibility statements that first one, he shall maintain professional judgment and professional skepticism throughout the audit. That is, the auditor should include in the audit report. See students, the auditor shall provide that he is maintaining the professional judgment and professional skepticism throughout the audit. That is one of the topic to be included in the audit report. The next topic is, see, he should identify and assess the risk of material misstatements which when he has been auditing the financial statements. And the third point is to check the internal financial controls in the preparation of financial statements. And also the auditor should evaluate the appropriateness of accounting policies, accounting estimates and accounting disclosures. And the auditor should also evaluate the management use of going concern assumption, and the auditor should check overall structure, presentation and contents of financial statements that are fairly presented as per fair presentation framework. See, the next topic he is going to be included in the audit report is the key audit matters communicated with those charged with governance. Okay students, according to appendix to the audit report, the auditor responsibility shall include to maintain professional skepticism and professional judgment. Okay students, to identify and assess the risk of material misstatements in the financial statements, to check the internal financial control, to evaluate the appropriateness of accounting policies, accounting estimates and accounting disclosures. Okay students, to evaluate management use of going concern accounting is appropriate or not, whether there is a material inconsistency in going concern, the auditor should check. Okay students, next, to evaluate the overall structure, presentation and contents of financial statements are as per fair presentation framework. Okay students, next should take, include is key audit matters communicated with those charged with governance. These all points are to be included in the appendix to the audit reports of the auditor's responsibility. Okay students, next point number 12, report on other legal and regulatory requirements. See students, other legal and regulatory requirements, that is example CARO 2020. If the CARO 2020 is applicable for a particular company, there are reported on the point number 12 of contents of audit report, that is report on other legal and regulatory requirements. Okay students, signature of the auditor, the audit report shall be signed in the personal name of the auditor. Okay students, place of signature, the auditor shall specify in which place he has signed the audit report. If he has signed the audit report in the Delhi, then he should specify the location of Delhi as place of sign or signature of the audit report. If he has signed the audit report in Hyderabad, then he should specify the location of Hyderabad as the place of sign or signature of the audit report. Okay students, date of audit report, the date of audit report should not be earlier than the date of obtaining the audit report, that is sufficient appropriate audit evidence to provide the auditor basis for opinion on the financial statements. See students, before, see, date of audit report should not be earlier than date of obtaining audit report, because sufficient appropriate audit evidence. See students, auditor will obtain sufficient and appropriate audit evidence and the auditor will conclude whether there are material misstatements or not. then auditor will give opinion. After the opinion only, the date of audit report should be specified. That is what discussed in point number 15 of contents of audit report. See, date of audit report, not earlier than date of obtaining sufficient and appropriate audit evidence to provide basis for our audit opinion on financial statements. See students, point number 16. See students, UDIN, Unit Visual Identification Number, shall be quoted on audit report by the auditor. It is a new updated one. It is implemented in 2019. Okay students, for more auditing classes, please like, share and subscribe to my YouTube channel, because that will be encouraging to me to put more CA final auditing classes. Okay students, please once more, please like, share and subscribe.